I think at the seed stage, it's about the team and the bigger vision. I think a lot of early investors will show their financial model for the next 3, 4 years, and I think that we all would love to believe that they're going to grow 2, 3, 4, 5, 6x every single year. But I think the reality is there's going to be pivots and there's going to be things that they're going to run into. The product might change completely, and so you're really betting on the team and their ability to deal with adversity. And do they have a big enough initial vision? And if they get thrown off, like, are they able to deal with what that pivot might look like? Less on the numbers at the early stage.
Hello, everyone. I'm Brittany Mason, your host of The Alternative Mason, and we are back with another episode. And today I have Matt Ober as our guest. He is the managing partner at Social Leverage, an early stage VC firm investing in FinTech and vertical AI. The firm is known for early investments in Robinhood, El Toro, Alpaca, and Customer, acquired by Meta. Before Social Leverage, Matt was chief data scientist at Third Point and an early employee at WorldQuant. I'm really excited to dig in today with you, Matt. Thank you so much for taking the time to come on.
Yeah, thanks for having me.
All right. Well, I like to start the podcast with what your why is and, how you ended up in the financial service industry in the first place. Tell me a little bit about your background before entering this space.
Sure. I think it goes back to out of college, long, long time ago. I joined a company called Bloomberg, which I think is famous for the Bloomberg terminal. And I think that just kind of jump started my financial services career. I started there. At that point, it was like starting on the phones. And I think, you learn how to use the Bloomberg terminal and a full education on what the buy side and hedge funds do, what the banks do, and all the different players in the space. And from there, it was a good launching ground for me to leave and actually join a hedge fund. So that's how I got going, was learning the software side of things.
The software side of things. Okay. So were you always interested in tech as a child, as a kid growing up? What were your passions in?
I think so. I was always in sports, and I think it was competition. I think thinking of the stock market and working in investments is probably the ultimate competition of people trying
Yeah.
to be the most successful investor or find the best opportunities and deals. And so I think that's what attracted me to joining that world once I kind of learned about it out of school.
How long were you at Bloomberg for?
Just over 5 years.
Oh, wow. Okay.
Yeah. So started in San Francisco, then they moved me out to New York, and that's where I think I really learned about the opportunities out there.
Do you feel there was a big cultural difference working between San Francisco and New York? I know the cities are both very different cities.
Complete difference. This was before San Francisco was everybody doing startups, and in this world we live in now, everybody doing AI. San Francisco was like a retired Wall Street. I think everybody I
Mm.
worked with out there that was older had worked in New York or London or somewhere, and then eventually retired in SF. So definitely a different culture, faster pace in New York, different mentality.
I see. I see. So, what problem in wealth management still has not been solved, even after a decade of fintech disruption?
Yeah, I think if you look across wealth management, technology and software in general is just very old school, and it's a lot of manual work. We do a lot of investing in wealth tech, whether it's giving the everyday investor access to things that maybe was only once available to ultra high net worth or family offices, things like better lending rates or different lending products, direct indexing, which is like a great way to invest with taking into account all the tax obligations and reduce your taxes over time. So I think the entire software of a wealth manager is very hands-on and very manual. So I think you could look at every single part from first day you sign up to join an advisor to how do they deliver you your performance and reports and better even understand what you care about.
So, shifting the energy a little bit, well, where would you see like the biggest gap between what consumers want and what fintech and what founders are currently building?
Biggest gap. I think at the end of the day, The consumers want like answers. They want
Mhm.
automation. A lot of people want things to be simplified. I think obviously with the world we live in of AI, like that's becoming easier and easier. But I think there is that whole idea of like why can't all of my financial services live within one app, right? Why do I
Mhm.
have like dozens of apps on my phone from credit cards to investing to savings to
Yeah.
managing my children's accounts? So I do think there's that super app, but also automation of everything. Why do we have to do taxes at the end of the year or have an accountant to do things like tell us what to do? Maybe we're spending too much. It should tell us slow down on your spending or move
Mhm.
money from one account to another. So I think simplification so that we
Mhm.
can go enjoy the things that we want to spend our time on and not think
Yeah.
about our own finances.
Yeah, I actually run out of space on my phone, I feel like, all the time. I have so many apps, but I use them, but and it's my phone will be like, "Oh, you have to re-download this app," and I'm like, "I just used it. Why am I re-downloading this again?" It's
Yeah.
because there's just not enough space. So, as far as how we're seeing things evolve with Gen Z, I feel like they're just disrupting the workspace quite a lot. How do you foresee things evolving with millennials and Gen Z as they evolve more in this space with wealth tech?
I think that with Gen Z, there's a couple things. There's obviously the whole transition of money being passed down, right? There's a lot
Yeah,
of people retiring, a lot of people that have small businesses, a lot of wealth that's going to be handed down to the next generation. And that generation is on Robinhood or on apps that are a little bit more modern. They're not sitting at a Morgan Stanley or a traditional wealth manager. So I do think that gives Robinhood a really interesting opportunity to capture a lot of the wealth management space. And they've done that with some of the acquisitions they've done. And I think it's going to become more and more prevalent. I also think my partner Howard always talks about the degenerate economy, but the younger generation wants to do everything from their phone, from trading to ordering
yeah,
food. And now we have prediction markets. And so, like, sports gambling and investing is all blending together. And I
yeah.
think that doesn't seem like that's going to change going into next year.
What are your thoughts on this new app? I've been seeing a lot of advertisements push for it recently. Kalshi. Kalshi.
I mean, I think that's what's powering Robinhood's predictions. I think that that's where the future of gambling is going, and we're going
Hmm.
to have predictions on everything. I mean, you can now do predictions on interest rate cuts today to where's the price of Bitcoin going to be to when is Travis Kelce's wedding going to be, or will they end
Yeah,
up getting married?
exactly.
So I think it's blurring the lines of what is gambling and what is investing. I think it's going to be integrated into everything we see, and I think it's going to be more and more in the media. CNN, CNBC, everybody's signing partnerships, and you could argue where everybody's congregating and predicting is going to become topics in the news.
Where do you think our focus should be most now, then?
As an investor, or
Yeah,
just as an average everyday person,
as an investor, of course.
yeah, I mean, as an investor, listen, I think what we're excited about is, over the next 10 years, everything will be rebuilt from an AI native type of technology standpoint. So I think that, blockchain and crypto were exciting a few years ago. I think we're finally finding use cases with blockchain from uses of stable coins and movement of money. And I think for the next 10 years, everything that was built software wise, apps came out and software was all over the internet. I think everything's going to be rebuilt from an AI perspective. So it's going to be a lot less work for us as end users. And I think it's exciting to think about the free time we get back as AI handles a lot of the, you know, small tasks.
So you're super pro AI.
I'm pro AI on the idea that I think it's going to allow companies to build faster and leaner and things, and our
Mhm.
lives will be easier and we'll have less busy work. I'm less believing that AI solves everything and that you can build a company with just AI or build a website and code everything in just AI. I think like we're not fully there yet, but I do think what teams are able to do, a team of two is able to do so much more than they ever were able to before when they're starting a company.
Tell me about social leverage.
Yeah, so we've been around about 17 years. Started by my partners Howard Linson and Tom Peterson. Howard was the founder of StockTwits, which is like the Twitter for finance.
Hmm.
We're still active there, sit on the board. Howard's still chairman. And we're on our fifth fund. So we write $1 to $2 million checks. We invest in early stage companies. We call it seed stage. So companies that are below $10 million in valuation. And we're hands on. We take a board seat. FinTech and vertical SaaS or vertical AI, those are really our areas of expertise. We're probably most well known for in first investments in Robinhood or eToro, Alpaca, customer with a K. Um, so my focus is mostly on the fintech side, which is where I spent most of my careers in financial services, and that's both on the business side, but also thinking about like what's the next consumer app. I think social leverage, the name has always been about leveraging your social network. So
Hmm.
instead of financial leverage, we leverage our social network. And I think across our founders, our investors, and just a broader network, we get to see a lot of things before anybody else sees them, just given the inbound we get.
So seed stage, let's talk about what what's something founders pitch that matters far less than what they would think.
Yeah, I think at the seed stage, it's about the team and the bigger vision. I think a lot of early investors will show their financial model for the next 3, 4 years, and I think that we all would love to believe that they're going to grow 2, 3, 4, 5, 6x every single year. But I think the reality is there's going to be pivots and there's going to be things that they're going to run into. The product might change completely. And so you're really betting on the team and their ability to deal with adversity. And do they have a big enough initial vision? And if they get thrown off, like, are they able to deal with what that pivot might look like?
So
So
what should
less
we
on the numbers at the early stage.
less on the numbers? Yeah. So what do you feel that they should focus more on their pitch? What actually matters the most to you? What's it
I mean,
what
for
will
us, we want to. Yeah, for us, we want to see founders that have a product that we can look and feel, play with, a few customers, get some actual feedback from people that want to use it, and see some clients that'll actually pay for it. I think that's most important for us to hear from clients that love the product or what we can actually use ourselves. And I think for us, we want to see like, is it something that we're not only excited about that, but we think we can help with. Love if it's a product where I can pick up the phone and ask people their opinion and end up making the first dozen sales.
what would be an example of like the best pitch you've seen that was a
Best
standout for you?
I think it's more like we know, I would say when we meet founders, typically pretty early, right away from just seeing their confidence in what they're building. I can think about our most recent portfolio companies in Fund 4, a company called Archive Intel, which is like compliance for the wealth management space. Larry knew exactly what he was building, and we knew the exact problem because we had it ourselves because we're SEC registered. It was an easy one. I've also used the competitive product my whole career. Not in fintech. There's a founder, Danny Frankel, who worked at Facebook. He started a company called PunchUp.live, and I think he knew exactly what he was building. He had a great team that he recruited, and you could just see the energy of what he was going after. And so, from a person that you're going to spend maybe 10 years working with, you
Yeah.
could see yourself talking to on a daily basis, and you could also be helpful, which is maybe you would argue not our sweet spot of fintech, but we do stuff in and around the media space. So
Yeah.
it's another one that's interesting. And then there's a company in Canada called Fiscal.ai that was originally called FinChat. I spent a lot of my time using data for investing and everything. And I think it's a team of four, founder or the CEO knew exactly what he wanted to build. And I think he was persistent. And I think we probably met him and talked to him for about a year before we invested. But
Wow.
just like the constant checking in and transparency and keeping up, we've had a lot of those, I think, over the years where we'll meet somebody, maybe it's too early, it's not the right fit at first. They are persistent and keep us up to speed on everything, and it ends up working out in the long run.
Yeah. So you have a quant background. Tell me about that.
I think I would say I have a background working at a quantitative hedge fund. I
Okay.
wouldn't call myself a quant myself. When I
Okay.
joined World Quant, it was less than 100 people. Majority of them were PhDs, math, computer science, And I was brought in as probably the first non-quant to think about how do we grow the business and like what do we need to grow the business. And that was why Igor Tulchinsky at the time, who was the founder, brought me in and said, we have the smartest people. This is how we're making money. We want to 10x everything every year. Help us do that. So I'm smart enough to sit in the room with the quants and understand what they're doing. I don't think I could take any of their day jobs. So
It's intense.
yeah, different, completely different atmosphere than like a traditional investment firm.
So, what did that teach you about predicting human behavior in markets?
I think for the quant firm, what it teaches you is like not everything is explainable, right? There's a lot of quantitative finance is automating ideas, but then a lot of it is also just pattern recognition and finding anomalies. And when things happen in data, it leads to good performance and strategy. So I think if it taught me anything, there's a lot of different ways to make money,
Mm-hmm.
and risk management and process and just the whole operations, that was probably what we were the strongest at. We had very strict operations and process. We used to call it like a factory, and like there were factory workers and everybody did their job, and
Mm-hmm.
it all came together in the end.
Beautiful.
Yeah.
What would you say is like the biggest misconception that people have about data-driven decision making in a space like that?
I think there's a big misconception on how much money firms will spend to buy data. I think
Mm-hmm.
in total they spend a lot of money. I think you meet a lot of companies that think they're going to get paid $1 million a year to sell a hedge fund data. I think that's rare, if ever, that does that happen. I
Mm-hmm.
think also they overthink how easy it is to go from like an idea and a strategy to actually it making money in an institutional world, right? Like there's a difference between managing 50 million and managing 5 billion. And how
Mm-hmm.
does that actually work when you start to try and put that strategy in the market?
How does regulatory complexity shape which fintech ideas are even possible?
Yeah, so I think at the early stage for us, where we invest at social leverage, like sometimes you're investing in things where they have to figure out the regulatory. We weren't investors in prediction markets, but you can see Kalshi and Polymarket for the
Mm-hmm.
last 10 years wasn't really legal or wasn't legal in the US. And then a flip of the switch and things now they're taking off and they're worth 10 billion plus. But there were a lot of prediction markets websites back 10, 15 years ago that never made it. So I think it's a
So
it's a
this has been
timing
tried
thing.
before. It's been tried
It's been
before.
tried before in different ways. Maybe they were a little different. They didn't have the scale, but from a regulatory perspective, it's no different than crypto if you think about it, from getting the licenses to have an exchange in the US or what's
Yeah.
legal and what's not legal. So I think a lot of times for seed investing, we're investing in things early before they're possible. We're investors in Robinhood in the early days where they commission free trading. That was the first idea of commission free trading. Wasn't like it was illegal, but it was definitely discussed a lot with payment for order flow and so forth.
What personality traits do you feel are most important to founders who are building like an iconic company? I mean, what sets that type of founder apart?
I think they have to have a chip on their shoulder. I think as much as it's about a lot of things have to line up, right? It's got to be the right
Mm,
timing. They've got to build the right team. And the best founders are great recruiters at building and bringing people in around them, right? You can only grow so much without great talent around you. They have to be great at fundraising. I think at the end of the day, like they're going to need money to grow. Financial services becomes expensive a lot of times in the long run, depending on if they're regulated and they need access to capital. And so
mhm,
like you're selling people to join you, you're selling people to give you money, keeping your team excited about the bigger vision. And so like you have to have those things line up on
mhm,
top of a little bit of luck in the markets and everything. I think
mhm.
founders that have a little bit of grit or have been through things and
Grit.
can handle adversity is important.
It's a great book too. Angela Duckworth wrote
Yeah.
that. Grit. Um,
Yeah.
I heard what you said, a chip on their shoulder. I have to come back to that because I heard Manish Kata actually said that in a speech that he did a couple of years ago. I heard him speak from Potomac. What do you mean by a chip on their shoulder? Tell me more about that.
You got to be. I think of a chip on a shoulder as like you're a little bit angry about how something went, or you were overlooked for something, or there's something that's driving you
Yeah.
to prove somebody else wrong, or
If you can
thinking
tap
something should be
into
done
that,
better.
if you can tap into that, it is such excellent fuel. And his what he
Right.
said is chips on shoulders create chips in pockets. Chips and shoulders create chips in pockets. I love that. And so it's kind of always stuck with me because I had a very different background and made a massive switch over to the financial service industry only really during the pandemic. So massive career change. And so that's why I have such a diverse group of listeners. So obviously now I have a career in this space, but still have a lot of followers that are also, I get a lot of young women that are coming to me now and wanting to learn. And so, but I love that saying. And I only made this switch into this space because, yeah, I had to go, I actually had to make an alternative decision and an alternative path in life from what I was doing. So, my next question is for you. Yeah, I felt like I had a lot to prove in the financial service space. So, my next question for you is, have you ever had a time in your life, and I'm sure you have because we all do at some point, where you've had to make some tough decisions, a totally alternative path from what you thought you would be doing? And what is that? And how did you come through? How did you make it back on top?
Yeah, I mean, when I started my career at Bloomberg, I definitely started and it was like Ivy League graduates. I went to the top universities, all these things. I got a job there and I think it was great and I was excited for the role. I went to a state school. I didn't have the best GPA, but I knew enough to get a job because I did well in the group interview, which really was because I studied abroad and learned something overseas that
Hmm.
nobody else in the group interview knew. But I think I had a 2 week window where they said like, you really want to be here and or be at a hedge fund one day and do something, you got to leave San Francisco and go to New York. And they're like, we want you to pack up and move in 2 weeks. And I think I grew up in the Bay Area. My family, I'm oldest of five. It was like a complete switch.
Yeah.
And even when I got to New York, it wasn't like I had a new job, but I think the people in San Francisco knew go there and you'll be able to get to where you want to be. And
Yeah.
so it was, I didn't know anybody in New York. I had like maybe one or two people I knew from high school, but no close
Yeah.
friends. And packed up and left and never looked back. Thankfully, now I'm back on the West Coast after 15 plus years in New York. It was the right decision in that short time window.
That's fantastic. So
Yeah.
you said how long in New York
I
now?
was in New York for about 15 years,
15
and now I'm in
years.
San Diego.
Oh, now you're in, so now you're back to California. So now,
Yeah.
yeah, it's a little more relaxed there now.
A
Yeah.
little bit more quiet. I travel a little bit now since I've got to get on planes here and there for meeting
Yeah.
companies and board meetings, but not the day to day New York City grind.
I never thought I would leave New York. I lived in New York for a while too, and once you're there, it's very hard to leave it. You really do feel like you're in the center of the universe, you know.
Yeah,
Yeah.
that is true.
So what do you think distinguishes a product first founder from a market first founder, and which one wins?
I think there's a lot of companies that build great products but don't figure out the sales side of things.
Mhm.
I think you've got to be able to sell. So whether you have a great product or a good product, the best
Mhm.
founders I've met are really good salespeople, and the product can catch up. They obviously it's helpful to have a technical team, but I think in the world of AI that I know we keep talking about, but I'll go back to it. Like it's easier to build products now, but it's hard
Mhm.
to get distribution. So if you can build a good product and don't have distribution or haven't figured out sales, it's hard to just bring somebody in to do that. You've got to do the sales yourself at first. So
Mhm.
I think you've got to have some domain expertise, right? Some experience in the area you're going after, and then if you're a good salesperson, it can get you a long way.
Yes, everything comes back to sales, I feel like,
Yeah,
you
I
know.
agree. In some way or another, everybody's selling something.
Exactly. Exactly. In one way or another. Where do you see the next breakout category emerging with the intersection of AI and financial services?
I think that there's obviously exciting things happening in the wealth space and wealth management. I think there's a lot of interesting things happening in, I'll call it like the capital markets data space. So,
Mhm,
in investing, there's large data and information services companies like S&P and FactSet,
mhm,
Bloomberg. These companies employ tens of thousands of people, mainly offshore, collecting data. In
mhm,
a world of AI, you don't need 10,000 people. You could
mhm.
do it with 100. And so I think that it brings a really interesting opportunity to think about like who's the next Bloomberg or FactSet.
Yeah,
And we always hear those a lot, and they're like some nice fancy login and terminal, but I mean like more like the underlying data infrastructure. And I think you can build some really exciting companies, exciting for the investors, maybe not to the end consumers day to day, but you can build some really S&P and FactSet. Those are $10 billion plus companies.
yeah. What so let's talk a little bit about your funds, and you are on fund 5 now. Tell me about that.
That's correct. We are on Fund Five. We are about five companies in Fund Five. Fund Four, we deployed as of the end earlier this year. We made our last investment, and we also had a fund to fund at one point where we backed 19 other managers. The idea there was we have a network of a lot of funds that we personally invested in, and so we put that into more of a structured vehicle so we could invest and back other managers that do similar things to us, but maybe have deeper domain expertise, whether it's crypto or healthcare or different areas that we wouldn't be as experts as some of the counterparties, which has been great for our network. And so in Fund Five, five companies so far, three, maybe four of them more on the financial services side, and one more on like vertical AI side.
Interesting.
Yeah.
And okay, interesting. And what patterns did you notice when evaluating for the funds of funds?
I think how we look for founders, the fund managers, like
Hmm.
experience, you know, how do they think about discipline around valuations and what type of expertise do they bring to the table when they're working
What were
with
the top
companies?
traits, though, if you could sum it up? The top traits of those who consistently showed up on top as top performers.
Discipline, right? It's hard to say no most of the time to
Hmm.
founders. Um, I think that experience, like we believe, like we invested in mostly guys with deep experience and expertise.
Hmm.
When you meet a founder, like they can help the person more than just like everybody says they can help, but like they understood the problem set and really understood what those founders were trying to achieve. Those would probably be the top two.
Okay. Where do you see social leverage in the next 5 years?
I think we'll continue to do what we've been doing for the last 17 years, which is back the best early stage founders. I think financial services and fintech is an area of our expertise. We continue to do vertical SaaS or vertical AI now, is what everybody's calling it.
Hmm.
I think we'll expand more and more into the wealth side, and we'll see different products offered by the
Explain
firm on that
more.
side.
Explain more for our listeners. Vertical SaaS.
So you have vertical SaaS, and then you have enterprise SaaS typically.
Hmm.
Enterprise SaaS would be like the next Slack or the next Microsoft Word, right? It's a software used by every industry, by anybody. A vertical SaaS, so that'd be enterprise SaaS. Vertical SaaS would be specific software for an industry, just for construction industry, just for the wealth management industry. And I think where we're moving towards now is a lot of people calling it vertical AI, which is AI just for a specific industry. So I want to use artificial intelligence just for the legal industry, right? And it's just going to be to help lawyers be more efficient
Mm,
versus open AI is kind of AI for everybody, right?
yeah.
You could ask it a question about a cooking recipe, or you could ask it to help you draft a legal doc. It can do everything.
Hmm.
More verticalized, understands the workflows, understands what your day to day is really about. And
Hmm.
so I think vertical SaaS is more and more becoming vertical AI. And so we'll focus on that and financial services as our main areas of expertise.
What's a vertical that you think will produce the next Robin Hood sized company?
And I think the legal space is interesting. I think we've been doing stuff there on our firm. I think that the wealth management industry, I think we will see like a emerging new AI company in wealth. Robinhood is great, but it's obviously not a fit for everybody. And so I think like we'll see something come from that side of the world. And then listen, I think obviously we have prediction markets, right? So that's obviously been taking off.
Looking back from Bloomberg to hedge funds to VC and everything that you've done, how would you define your journey?
How would I define my journey?
Yeah, sum it up.
I think I learned an incredible amount of knowledge from Bloomberg. I tell people that are graduating from college, Bloomberg is the best place to learn. They train you, they teach you, there's classes, you get everything. I
Mm-hmm.
got to see quantitative hedge funds. I got to go to Third Point, which is activism and structured credit. I feel like I got the best institutional training I could possibly ask for to now be doing venture and sharing all that knowledge with founders, leveraging the network I built for that long time period in New York. So I think I couldn't ask for a better learning and experience to then be able to leverage that to help the next big company.
Excellent. Well, what are three pieces of advice you would give someone who perhaps wants to become a data scientist or go into this space, a quant or in fintech in some capacity? What are three pieces of advice you would give to them?
I think it's more generalized, which is like the network is everything, right?
Network.
Like you've got to build your own network,
Mm-hmm.
show up to events, reach out to people. Like you never know, from senior to junior, people that I met 15 years ago are now leading businesses, right? That you would never have thought would have
Mm-hmm.
the role they have now. I think the learning really starts after school, right? You get the
Mm-hmm.
building blocks when you're in school to learn, but you've really got to like dive in and hone your craft and like pick
Mm-hmm.
something that go deep on something and become an expert. And I think tools are changing so much now that
Mm-hmm.
I think you got to decide if you want to be somebody who's really in the weeds all day or if you want to be more of a leader and that sales type of person.
Yeah.
I
Yeah.
think you can be successful on both sides.
Which do you prefer?
I don't like being in the weeds all day. I think I'm
Yeah.
more for better or for worse, better on the phone.
Yeah. More of a people person.
Yeah.
How would you describe your leadership in three words?
Fair, um, transparent, hardworking.
Love it. What are some resources that people can look up as well to for more education in this space? What are perhaps your favorite books, podcasts?
I love the podcast, Invest Like the Best. Fundamental Edge by Brett Coffrin is a great learning classes and stuff. I think there's a ton of newsletters out there. I write, my partner Howard
Yes.
writes. I think like you can consume endless newsletters that are out there. If
Mhm.
you want to be in the hedge fund space, reading the great hedge fund managers, their quarterly letters,
Mhm.
right? It's a great way to just think about how they are going about things or what's driving their thought process. Michael Perek is a great writer on everything AI and really makes it simple. Those are top that come to mind.
Fantastic. Is there anything you'd like to leave our listeners with? Anything else? Any final thoughts?
Yeah, I mean, I think in the world we live in right now, it's an exciting time to start a business, whether that's
Yes.
for venture firms or that's just to start your own company. I don't think you have to be technical anymore to do that. Right? There's tools that are out there. We can all learn to build something, and you can build something that you're passionate about, and the money can come from that in its own way. Right? I think we're a investor in a company called Beehive that you can have your own newsletter and podcasts and sell things. You can be a creator, And you can really monetize that if that's what's exciting to you. And so I think it's a exciting time to build something, whether it's your main job or a side hustle.
It's no better time to be an entrepreneur.
That is right.
Yeah. Yeah. And it's never too late.
Correct.
I love it. Well, thank you so much. Thank you so much, everyone, for tuning in and listening to another episode of The Alternative Mason. And where can they find you, Matt, if they'd like to give you a follow or perhaps follow your newsletter? You said that you write a newsletter.
Yeah, you can follow me on LinkedIn. My newsletter is mattober.co, socialleverage.com. Those are probably the three best places to find us.
Excellent. Thank you so much for all of your
Thank
advice.
you.
I hope you all learned something today. I know I did. And we will see you next time on The Alternative Mason.
Thank you.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparisons are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of capital. Please seek advice from a licensed professional.